Are you rushing to throw every spare dollar into the stock market while your checking account hovers near zero? One out of every three adults cannot cover a basic $400 emergency. We are talking about an amount less than most monthly car payments. Investing without a cash safety net makes a portfolio fragile. A single unexpected expense can force you to sell your assets at the worst possible time. Over the next 5 minutes, we are going to calculate your precise safety net target and fund a dedicated emergency account. Grab your phone and a calculator. Establishing this baseline foundation protects your long-term wealth from being cannibalized by short-term emergencies. Step 1. Log into your brokerage accounts and pause your automatic deposits. We need to designate a standard basic savings account as your fortress. You might worry that keeping money in a standard savings account means losing value to inflation. Watching cash earn pennies and interest feels about as productive as teaching your goldfish calculus. This cash serves as an insurance policy for your portfolio. It exists specifically to protect your higher yield investments from being liquidated prematurely. If your car breaks down during a sudden market downturn, you are often forced to sell assets at a loss just to pay the mechanic. Taking a slight loss to inflation on this cash buffer is the premium you pay to protect your long-term wealth from everyday disasters. Step 2 requires immediate action. Open your most recent monthly bank statement on your device right now. Scan your transactions for impulse buys or forgotten subscription services that can be eliminated. Cancel that subscription today and transfer an initial seed of $50 into your savings account. You need to see that savings account balance move from zero to an actual number today. Depositing this first $50 breaks the cycle of relying on credit cards the next time a curveball hits. Step 3. Write down 3 specific monthly numbers: your housing, your groceries, and your basic transportation. Use your baseline survival costs for this calculation, not your full monthly income. This graphic shows the formula. Add your essential expenses together and multiply by 3 for a minimum buffer or 6 for a secure buffer. For example, if your rent is $1,500, food is $400, and transportation is $300, your essential monthly baseline is $2,200. When we multiply that by 3, we get a final fortress target of $6,600. Defining this precise target prevents the paralysis of trying to save too much. It gives you a concrete finish line for your cash foundation. Step 4. Set up a recurring automatic transfer from your checking account to your savings account. Keep your stock and crypto investments paused until this target number is fully funded. When an inevitable late-night emergency happens, having those funds already sitting in cash provides peace of mind. Instead of lying awake worrying about how to pay for a broken water heater, you have the luxury of time and options. A fully funded fortress alters your behavior. You stop making financial decisions from a place of scarcity and start making them from a position of financial strength. By following these steps, you have secured your first $50, identified your survival target, and paused risky investments to build an unshakable base. The mathematical advantage of investing early disappears if it causes financial stress during an emergency. While inflation takes a tiny bite out of your cash, the protection it offers your long-term wealth is priceless. Completing this foundation ensures that when life gets expensive, your investments can keep growing undisturbed.